Once that position is pared down or gone, they'll drop the bid. They'll just drop the bottom out of the price. All of a sudden, the futures markets will drop for no apparent reason. You don't have a clue. It just dropped. Boom, right? Well, it was in the cash market. That's what happens. If something is offered too cheap or bid too rich, look out. If it's offered too cheap or bid too rich, look out. Some traders have a tendency to overanalyze, and some exacerbate that by hesitating when the time comes to pull the trigger. I'm sure that we have all been there at one point or another. You plan a trade, you let the market come to you, and then you start second-guessing yourself and overanalyzing the trade, and then you watch it do exactly what you thought it was going to do. And then, of course, you get a bad case of the shoulda, woulda, couldas. Your technical analysis tools and methods play a critical role in the execution of your trade, provided that you have the discipline to stick to your plan and your rules. I can't tell you the number of times I have seen a potential Head and Shoulders top in sterling fail. Discipline says that you don't execute that trade until it breaks the neckline, right? It almost gets there, but never really quite does. If you try and lead the market by being too early, you run the risk of getting hammered. If you're trading the S&P, before you execute that trade via your exponential moving average on a 10-tick scale, look at the 50 and 100 tick scale first. You may give up a few ticks, but that discipline will keep you in more high probability trades. When the crowd starts to push you along, this is when you add to positions at levels that you have predetermined. This is when you force the weak players to capitulate. We all know that amateurs average down and professionals average up. Amateurs average down, professionals average up. When you start getting close to your target area, offer them higher or bid them lower. Okay? Take advantage of those that are wrong and squeeze them. Okay? Some technical analysis tools, such as Market Profile, will help you identify where these value areas are and where supply or demand should occur. Sun Tzu tells us that those who are first on the field of battle will be rested, and those that follow will be exhausted. Good soldiers cause others to come to them. Okay? The last position you want to find yourself in is having to chase a market. This is the argument for establishing your position early on. By doing so, you'll be able to better choose your entry points, add to winning positions, and your exit points, because you'll be operating from a position of strength, not weakness. Sun Tzu said to never follow a false retreat. Professionals and floor traders can see when the public is starting to chase a market. And what do? They fade the market. Everybody know what a fade is? When you fade the market? They take them up just enough. When the buying stops, they cut them off, take them right back down. Okay? It's called a fade. Even the most savvy and experienced traders can fall prey to this. A very well-known hedge fund operator always used a particular broker to execute trades in the S&P pit at the Chicago Merc. One day, here he comes, both arms up and palms facing out, thousands to sell. What did they do? The locals took that market down over 20 points. When he's done selling, they took it right back up. Okay? That's how some of the games are played. Market Profile is an excellent technical analysis tool for you to use, It'll help you recognize a fade and help you plan your next move. Okay. So change your perspective. Okay. Another example. The employment figures come out, and they're a big surprise. Bonds lose a point almost instantly. Okay. And you see nothing but member firms, floor brokers, headed your way. Now, you're a floor broker. You're a local. What are you going to do? They want you to buy them so their clients can sell them. Here comes Dorothea. She's the floor broker for Merrill Lynch. And she wants a bid on 400 March bonds. Excuse me, you think you could wait a few minutes while I check the exponential moving average? You think you're going to do that? I don't think so. Here's Mike. Mike's a floor broker for Morgan Stanley. He wants me to bid 400 December bonds. Mike, you think you could wait a few minutes while I check the moving average, convergence, divergence? I don't think so. Here's this gentleman. Here he comes. He's heading my way. He works for Goldman Sachs. He wants me to bid 500 June bonds. You think he can wait a minute while I check the relative strength index? How many of you think this scenario is very likely? No, of course not. It's not. Okay? What you're going to do is downtick the market. The locals will downtick the market. Rather than buying the bid and selling the offer, they will sell the bid and then some, thereby exacerbating and adding momentum to that downward pressure until the selling stops, and that's where they'll stop. Okay? That's what happens. As upstairs traders, we can visualize this happening. If you have live markets, you can see it happening. Prices not only move through those exponential moving averages, they actually get outside the envelopes like Bollinger Bands. Okay? The question is, how could you have taken advantage of this opportunity? Okay? Those employment figures could have just as easily gone the other way. So instead of having an opinion, learn to think in terms of who can I take advantage of and how can I do it? Change your perspective. Okay? No trader worth their salt is going to tell you what they are going to do. Okay? They might tell you after the fact so that you help push their position along, or they just might be telling you the opposite. Sun Tzu said that all warfare is based on deception. A few years ago, a well-known hedge fund operator gave a speech in Tokyo, well televised, and he told the world to buy treasuries and sell yen. What happened? Yen went from 100 to 125, and treasuries lost a considerable amount of ground. Now, was he wrong? Or did he need the public's volume to get out of his position? Okay? Sun Tzu would tell you that the ability to gain victory by changing and adapting to your opponent is called genius. Warfare is fluid. It changes constantly, and so do the markets. You should continuously challenge your methods, your assumptions, and your thinking to see if they're still valid. Okay? If you can do this, you can change to ever-changing markets and change your strategies and tactics to this ever-changing marketplace we have, and change your perspective. So, the art of war teaches us that you must use deception and change the enemy's perception of what you intend to do. One of the problems we all have to deal with is information overload. You have to learn to recognize when you are being fed misinformation or disinformation. The next time you watch television, ask yourself, does this individual have an axe to grind? Okay? How dependent is their firm's business on an optimistic public? Okay? A few years ago, that well-known daily financial newspaper, would send their reporters to the Chicago Board of Trade. And they would corner a trader and ask their opinions on markets or issues or whatever. And the trader would be glad to oblige. Okay? And when they were done, the reporter would go off thinking he had the inside scoop on something. The trader would go the other way laughing, knowing what was coming in tomorrow's edition. Okay? One of the choices we have to make is when we execute our trade. Okay? Morning markets tend to be public. They're characterized by good two-way volume and are very liquid. Midday markets are tough. They're difficult. They're quite often choppy and quiet. Be very careful when you execute trades in midday markets. Late afternoon markets, particularly the last hour, are very often institutional in nature. And that's why you see the volatile price swings that you do. Okay? Late afternoon markets can also be local in nature. Okay? An excellent technical analysis tool for you to use to help you analyze the price action is market profile. It will help you discern between the value area where most of the day's trading occurred and the closing price, which may or may not reflect that. Sun Tzu would tell you that wise generals are versatile, that the general who can easily adapt will know how to employ his forces, and that the general that does not will not be able to take advantage of opportunities. The first concept I mentioned was the ability to be adaptable and flexible. If you're going to be a successful long-term professional trader, you have to be just as willing to sell as you are to buy. You would be amazed at the number of one-way traders there are out there. Now, versatility is great, but it does not mean spreading yourself too thin, okay? And getting involved in markets that you don't know. For a successful stock market investor, to get involved in the currency markets is a recipe for disaster. The rules of engagement are entirely different. Okay? This isn't to say you shouldn't learn. You should. But until you do, stick to the markets you know. Okay? The exchanges have excellent education departments, and most of it is free. And I would encourage you to take advantage of that. Okay? Versatility also means learning to look at the markets in a different light than you normally do. How many traders do you know use 5-minute bar charts? Anybody? I can walk into 9 out of 10 offices over the Board of Trade and I'll see 5-minute bar charts. Okay? You would think Moses came down from the mountain and said, number 11, thou shalt use 5-minute bar charts. Okay? Instead of looking at 5-minute bar charts, try looking at 10, 15, or 20 tick charts.